Hemang Jani, retails equity strategist at Motilal Oswal, who joins us on the show. Hi, Hemang. Good to speak to you this afternoon. What do you make of this listing? Abhishek told us, well, it had all the characteristics to disappoint. It has disappointed. What do you make of this stock or the space on the whole?
Yeah, so good afternoon, Nigel. I think when we look at some of these spaces, what we need to bear in mind is that from a social cause perspective, it may be a great a sector. But I think if you look at the historical anecdotes, none of these microfinance companies have been great wealth creators, or where the growth in terms of the market cap has been phenomenal. And that is why we would rather stay away from a sector which is dealing in smaller amounts and cash and rural side, where it's going to be very difficult to track down what's really happening if something goes wrong. Scalability always becomes an issue. And we think that this is a sector that we would want to avoid, and we would rather want to focus upon some of the banks where the growth visibility and the comfort in terms of asset quality is much better.
Okay, so Fusion Microfinance is in a void for you. Let's talk a bit about tires as well. Balkrishna Industries and Apollo Tyres surging in the back of their Q2 numbers. Sonia is here with the details. Sonia.
Well, thanks a lot for that. I do want to start with Apollo Tyres because the stock is at a fresh 52-week high. It's had a good run all through the day. And the reason for that is that the numbers have been a big beat for Apollo Tyres across the board. Whether you look at the margins, which went up 40 basis points quarter on quarter, better than what the street was estimating. And the important bit is, even in a challenging environment in Europe, where Apollo Tyres has its presence through Vredestein Tyres, the European EBITDA has improved sequentially, and that is what the street likes. The EBITDA growth in the India business is important because it comes at a time when peers like MRF and CEAT have actually reported a decline. So Apollo Tyres is standing tall in that sense. The revenue growth has also been very strong, up 17.5%. The only problem for Apollo Tyres is the rising debt of the company. So the debt has now risen to about 5,500 crores versus 5,100 crores last quarter. Now for Balkrishna Industries, it's very interesting. It's been a volatile ride, but the stock has definitely recovered. The company decided to suspend its annual guidance because of the challenging market environment. They said that they are unable to guide for volumes because the situation in Europe may affect the second half of the year. Also, there's a downward revision in capex. Their achievable capacity now stands reduced to 335,000 MT per annum, and that is something that perhaps the street was reacting to initially. Then the management had a conference call, and post that the stock started to recover. The operational performance, though, this time around was under a lot of pressure, down about 21%, but the top line growth has been strong. Back to you.
Sonia, thank you very much for that. Hemang, particularly on Apollo Tyres, things appear to be improving. Quarter on quarter, there was a margin expansion. Their European operations positively surprised, and here the expectations were fairly low. So if Europe can really turn around for Apollo Tyres and contribute, it can constitute as a big positive surprise. Your thoughts on Apollo Tyres and generally on the tyre space, because we are seeing this divergent move. Last week, CEAT numbers were good, but MRF was a bit subdued.
Clearly, tire has been a space where many good things are falling into place, whether it's the fall in the rubber prices, which is reflected in the better margins. Also, we are seeing a much better traction in terms of volumes across categories. And for Apollo Tyre, the good part is that the European operations also are showing up good traction. So we do like Apollo Tyre from an auto ancillary perspective, and similar is the case with CEAT also, where we are seeing a much better growth in terms of volume with much better margins. So we think that this is a space where the outlook is getting better. Both the margin profile and the overall growth visibility is high. So both Apollo Tyre and CEAT is something that we like at this point.
Okay, Hemang, stay with us. We'll take a quick break here.